All right, welcome to Core 4. I'm Coach Brandon for another week and an exciting show on how we are going to change our lives and make some serious financial transformations. And so a lot of times people say, well, hey, Coach, what exactly is Core 4? Core 4 is a self-custody driven model that really supports projects and programs and people that can help you to grow your economic wealth without you happen to give up your money to someone else. So we have been scammed, we have been bamboozled, we've been all of those things, and it really, really hurts. But the reality of this is that in order for us to be successful, we have to break the mindset. We have to break our 9 to 5. We have to break current investment strategies. And then we also have to break retirement strategies. I mean, there's articles all the time about 401ks and how they work and how they don't work ultimately. And so you really have to do different things to help yourself to get to the next level. And so that means that, yes, you're going to have to risk some capital, but let's risk it where you're in self custody of it. Let's not risk it where we're giving it to someone else. I mean, just recently, I had a long term venture where I gave my money to someone, and actually, it was with yield farming. And what happened was, everything was going well. I was getting my payments monthly, and this was before I really made the commitment that I was going self custody only, like you're going pescatarian only. But the reality is that I get a phone call saying, "Oh, well, we had blended the money with somebody else's," and I'm like, "What are you talking about?" And it wasn't significant enough, but it again reminded me of why we promote at Core 4 a self custody experience. Now, that doesn't mean that you're going to lose money. That doesn't mean that there's no risk. But what it means is that you are intelligently handling and you're responsibly for the active side of how your money grows. Now, could you passively grow your money? Yes. And we have tools that we have talked about here that we are currently using at Core 4. We have a new exciting tool that we're going to be using, and I'm setting mine up and all the rest of that good stuff. But the reality is that we also have Chris Pulver and James Bishop, two of the most trusted public young people that are out here in our community and in our world, especially on the centralized side, that is helping us to grow our wealth and grow our capital in a safe and transparent way. And so they're here to basically give us the forecast of what the economics of the markets look like, but also gives you a dive in because each and every week they are with us. They are part of the Core 4 team and the Core 4 family. And so I want you to understand that, because a lot of times we don't really get, well, what is it that they're really saying? What they're saying is that they're here with you every single week, and the money that you're investing, that they're supporting you to grow, they're right here with you. The same way that I'm here, the same way Coach Indy is here, the same way Coach Sonia is here, the same way Coach Eric is here. We are all with you. And I don't think Coach Eric is going to be on the show this evening, but we have a great show. So anyway, so without further ado, we are going to start with the Core Forecast. So let me bring up Chris Pulver. Chris, man, how's your German, man? Last week I was worried about you, and you go off to Germany, and I thought you were going to see Wonder Woman. I didn't know what was happening. What's going on? You took Wonder Woman with you, didn't you?
Yeah, that's my fault for not communicating better about being absent last week. So I apologize for that. But it was a great trip. Basically Saturday to Saturday, saw all the countryside in Germany and Bavaria. Did some castle chasing. Stayed in some awesome cities. Just incredible, charming towns. People were great. Took the train, rented a car, drove all over the place. And I told you guys, my nephew was over there for a study abroad in Berlin. He was there for 2 weeks, and he had 1 week off. So we met up with him in Munich and spent the day with them. And yeah, it was great. It couldn't have been better. And honestly, market wise, I was watching everything from abroad. I know that as much as I'd love to say I'd love to live over there, it'd be a terrible time zone to trade.
Well, let me
So
tell you. So actually, I did, after you actually sent me that text, I was like, oh yeah, I do remember you were going. I just missed you. I didn't want
Yeah.
you to leave, but you're back. And so you've got
Right.
lots to share. But look, how's your arm doing before you get started? Is it feeling a little better?
I don't know, dude. Not really.
Yeah.
Honestly, when I move it now, it's all stuff is loose and broken up. So it's just gonna take some time. I'm still working out. I'm doing my thing, but whatever. I mean, it's gonna heal how it heals, and I'll try to get it better. So
Do you play golf?
I played golf for the first time with my clubs a couple weeks ago for a playing lesson I did in the evening, and hit it 40 yards shorter than I wanted to off the tee, but still scored fine. I hit the ball, center of the face is fine, but it's not fun to have zero speed behind it. So, James is probably just salivating to know, like, oh man, he's
Hey,
gonna play this guy.
you can't see it. I don't know if you can see it now, but he is laughing. He is
I'm
so
sure he
happy
is.
right now. He is so happy. Hold
Yeah,
on. Why are you smiling like that?
Oh man, just when opportunity always presents itself.
that's right.
You're like, you think he's Luca tonight in the game? Is that what it is?
No, I just honestly can't wait to get him down here. I've played this course. It's now, I think, ranked in the top 75 in the nation. It's called Cabot Citrus Farms, and it was an unbelievable course. And I mean, it's link style, and they tried to make it as linksy as linksy. So you'll be able to bound them up there. I had a guy hit 150 by me that rolled 90 yards. So that's the kind of golf you have.
I'm not much of a golfer, but if you don't mind me teeing off with a putter, then I'll be out there with you.
There you go.
Hey, find a short course. Find the new. That's the new thing, is building all the short game courses.
Yep.
All right, James. I'll talk to you. All right, Chris, you're up, buddy.
All right, thanks. So I thought it'd be a good way to catch up from what transpired last week. So the last time I was in Core 4 and Core Forecast, I had mentioned that what we need to watch for are checking on a couple of central banks, because ahead of the Fed, which is this week, we did see that banks are starting to cut rates. So the ECB cut rates on Thursday, the Bank of Canada cut rates on Wednesday. That's not a surprise. This is what's putting the dollar in a pretty solid position, at least in the short term, in the near term, because other banks are cutting ahead of the dollar. So that was last week. We had non-farm payroll on Friday. You can see here that unemployment ticked higher, but we beat expectations once again. 182 expected, came in 272. James will touch on all this stuff as well in great detail. But just taking the broader brush with this, I mean, I had said the central banks are going to start showing some monetary policy divergence, and this is the first week that it really transpired. The dollar actually ended the week higher last week. Going into this week, all eyes really are on Wednesday. We have CPI data for the U.S., which will be inflation. We have the Fed at 2 p.m. and 2:30 p.m. with the press conference with Jerome Powell. The takeaway for me is I'm essentially going to position for volatility for the next couple of weeks, pivoting on this week's Fed meeting. We're in summer trading. June, July, August historically are bullish months. So I'm not fighting the overall trend, but certainly there's some differences happening. I mean, dollar up last week, gold and silver sold off hard. Ethereum might be getting an approved ETF, or if it is officially approved and that transpired like Bitcoin does, we'll see if that pushes up the new highs, the new all-time highs in Ethereum. Bitcoin is hanging and hovering right around 70K. But if you look at this is actually the probability chart with the CME Fed Watch tool. And still, I go back to this because this is subject to change. Basically, coming into this week on Wednesday, there's a 99% probability, which is essentially baked in, that the Fed does nothing. But the important thing is that Jerome Powell is going to talk, and the Fed will likely set an important precedent, I think, on Wednesday to really prep the market for, if they're going to cut, when the heck are they going to do it? Are they going to do it in September? They can do it in November? We'll find out. But probability as it stands right now, and here's a good reference. You look at a tool like this and then see what it looks like on Friday. So after the Fed, after the rate decision, which they do nothing, but after the press conference and what Jerome Powell says, you see what these probabilities are and see where this moves around. Because right now, this market is still anticipating nothing until November, which I still think is a terrible window to cut rates, given the fact that 2 days prior to that, we have an election, and arguably one of the most contentious elections we've had since 2020. So it's going to be interesting. But like I said, see what this changes, or how this changes on Friday, and see if there's a market that reacts to the Fed on Wednesday this week. And so what I'm looking at would basically be this. if you're again in the core forecast with us a couple weeks ago, I noted we had some overbought conditions with divergence. Well, the only index that sold off the last week or two has been the Dow. The SPY is eclipsed all-time highs once again. I think we're at 24 now for the year, and that's like 19th all-time. We're off to a pretty good start. We're still sitting at 11 to 12% up for the year. But long story short, I mean, technically on a weekly time frame, I think this is the Fed's opportunity to talk the market down a little bit, just in terms of volatility. But of course, post-Fed reaction, we'll see if the market's eager to buy the dip. Two things the market continues to go on. Yes, monetary policy is an important factor, right? Interest rates. But right now, the Fed's going to stay higher for longer. The market has done a great job of, pricing in 7 cuts at the beginning of the year, and all of a sudden changing that to 2 cuts, changing that to 1 cut, possibly embracing the fact that we might have 0 cuts. So the reality is the market is going to continue to be forward thinking. The one thing that keeps happening, last 2 quarters especially, earnings has been pretty solid. And if anybody has been, getting out of the rock that we sometimes live underneath, NVIDIA keeps making headlines like crazy. Maybe GameStop was on your radar this week because of Roaring Kitty deciding to sit up in his chair and make himself known and drive GameStop prices and meme stocks all over the place again. That's a bunch of nonsense. And just, if you're doing that crap, good luck. Be careful. You'll never find me trading that way. That's insane. So anyway, index-wise, I still think a pullback is technically overdue. The SPY is at these highs. We could go higher. We could put in a top post-Fed. We could go lower. We could start putting in a bottom, post-Fed. But like I said, I am still overall bullish for the trajectory this year. Therefore, what I'm doing is I'm concentrating my portfolio. I have a slight bullish tilt, but I'm doing things way out of the money. So all that means is for the SPY, I'd like to see a bit of a sell-off, and I will position for, ownership at lower levels with the intention of really not owning it if I don't have to, but if I do, happy to repair it. Usually what I'm doing is I'm generating income every, 30 to 45 to 60 days. I like to stagger out those expirations and position myself out of the money and do it on the major indexes, Mag 7, diversified between energy, utilities. We have what else? We have some retail, we have some US, we have some non-US, we have all sorts of stuff for Streamwise Capital. But I still think a correction is due. Here's the SPY at all-time highs once again, weekly time frame. I don't see this indicator print very often, but it's overbought with divergence. Okay, we go into the Qs. The Qs on a weekly time frame has not connected off these highs, but I showed this it's been 2 weeks ago now for the show. But if I go QQQ right here, this one for whatever reason is connected. So why is it connected? Because I've hidden bearish divergence and overbought conditions with divergence. So this should have printed. I'm not sure why it didn't. I'll double check the numbers on that indicator. But this is what I would expect price to do. See how the Dow sold off right here? That's what happened. I would expect that the SPY and the Qs follow suit a little bit. The IWM, the Russell, also sold off last couple of weeks, right? So technically I could see the Fed being firmer, and a little bit more hawkish to kind of set the tone that, hey, look, we're probably going to stay higher for longer. We don't really want to cut rates. We don't have to cut rates right now. The market's doing fine. Labor is softening, blah, blah, blah. They'll say all the right things, and they'll say a little bit of hawkish, a little bit of dovish, and then it's up to the market to react. And that's really what I care about. I can sit there and listen to Jerome Powell. None of it matters. Just trade price action. I will trade volatility. So my goal for this next week is I will probably position for maybe 2 to 3 weeks worth of volatility, depending on implied volatility. If it is cheap enough, I will buy options. If it is, high volatility, high implied volatility, I will sell options. But basically we're at this level, and there's 2 things I'm going to watch. If we break the highs, I'm looking for the market to stay up on the week. If we break the lows, I'm looking for the market to stay down on the week. It's not that hard. I would expect the market to do very little Monday and Tuesday, and all the fireworks come in on Wednesday. And that might be a big day up and a big day down, a big day down and a big day up. Doesn't really matter. Like I said, I trade price action. So maybe on Wednesday all by itself, I look to, trade something a little bit more short term, maybe Wednesday to Friday. But then over the next couple of weeks, just letting this FOMC meeting give us the volatility expansion one way or the other. But like I said, long-term wise, we're sitting at high watermark highs for stream-wise, having a great year so far, and continuing to do so. And whatever happens, happens. I mean, I'll figure it out. We'll make money. We'll be positioned defensively, offensively. We'll have a little tilt. We'll step on the gas and leverage when we have to. But that is it. Brandon, I took 2 weeks of time, so thanks for letting me have the extra minutes.
Yeah, as much time as you need. No, it's
All right,
fascinating. And sometimes I like to jump in. And when I look at those red and green, those are your pivots. Is that what you're
So this is my short-term chart. What I look at here is this on the background, the shaded green and the shaded red. That's actually the color of the weekly candle. So this is a Monday through Friday. So the shaded area is Monday to Friday. If it's green, that's an up candle for the week. And what we have in between is this is my 9:30 to 10:30 support and resistance breakout. So I call that the opening range breakout. And what I'm looking for directionally is sometimes when the market, I don't like to trade right at opening bell. It's really noisy. But what I look for is just a simple breakout at some point, after 10:30. If it breaks to the south, tends to follow that direction. Breaks to the north, tends to follow that direction. So last week, you can see here that, Monday was a pretty good directional day early in the morning after we broke out at 10:30 or after. Tuesday was a very choppy day. Had a fake breakout towards the end of the afternoon. And then Wednesday, another good directional day. And then Thursday, Friday, nothing happened. So that's pretty typical for a given week. I mean, right now, traders might be thinking, you might have heard of zero DTE or, day trading and scalping. Look, you might get 1 or 2 directional days for a 5-day trading week. So, I mean, I pick my battles very closely or very wisely when it comes to, how often do I want to trade in a given week? I'm not saying that I'm not active. I mean, there are days when I'm closing out hundreds of positions. There are days that I'm taking hundreds of positions. But for me to be a day trader, I'm probably only looking for something like a Wednesday. A Fed meeting on a Wednesday usually gets the market excited to move one way or the other. And then post-Fed, Thursday, Friday, same type of thing. So the nice thing about a week like this is we don't have a lot of earnings to drive the market, but we do have a major news announcement in the Fed. And I think it's enough to get the market to be excited, at least in the short term. So that, to me, is my opportunity this week. We can talk about this next week and what did Core for, what do we do on the show? But I think the reality is, if you give me another couple weeks, we're probably going to have a correction of some point. But for me, week to week, if I've got a volatility catalyst like this, I'll probably make some good profits as long as we have a decent move. If we get the market to move, $8, $9, $10 on the SPY or the Qs or a little bit more than that, my job gets really easy.
I love it. All right. Thank you, buddy.
Cool. Thanks.
All right. What's up, buddy?
What's going on, man? How's it going?
What'd you shoot at that course?
I think it was like a 78 or something like that. So not too bad. Like 6 over. So Chris probably shoot, knowing him, even with one arm and one leg, he'd probably shoot like a 72, knowing him.
Is that true, Chris? That's probably true. Well, yeah. I'll shoot a 72 on a mini course on.
There you go. They do have a huge putting green. It's called it's a putting course, and every tee has drink holders. All right, so there you go. You can get those margaritas going.
Let's do it. All right, I'm out. You're up.
All right. Cool. So, Brendan, I do want to share my screen again. Let me do this. Share screen and entire screen. Share. Okay, so there is a couple of things that I'm going to be talking about here today. So last week, when I filled in for Chris's part there last week, we did talk about Bank of Canada as well as Europe looking at changing their central bank rates. They're now the second and third countries to lower their central bank rate. The first with Switzerland, then Canada, then Europe. In the meantime, Japan has raised their rates, and we'll talk a little bit about that as well. Then also this past Friday, we had non-farm payroll come in, and it came in it came in better than expected, right? Better non-farm payroll than expected. We were expecting and forecasting to have 182,000 jobs, and we came in at 272,000 jobs. We also saw average hourly earnings take a jump from 0.2% to 0.4%. So average hourly earnings going up. But what is interesting here is we went from 3.9% unemployment to 4% unemployment. So we did tick higher 2 times in a row for unemployment rate, but then they're saying there's more jobs in there. So it's just a very interesting overall scenario that happened. And we saw a really big whiplash day in the dollar on Friday and a whiplash day from these 2 announcements as well. As Chris said, up on the docket for this week, well, literally just now, about 10 minutes or about 30 minutes before this meeting, we had GDP come in for Japan. GDP was lower than expected, and final GDP quarter over quarter was negative. So that is a few negative quarters for Japan. So they had one, then a positive, then a negative. So if we continue on this negative streak, then that technically means, by U.S. definitions of recessions in other countries, not in ours, it means that there would be a recession. We have inflationary numbers coming out on Wednesday, followed by, as he said, all eyes are on the Fed. And one thing I do agree with Chris on is that we will more than likely see rates hold this month. And I honestly believe that it will be from October to December. We will get a tester cut. I don't think it's going to be a big cut. I think it'll be a 0.25% just to give the market that little bit of breathing room because of what happened with GDP and the other announcements that happened the other week. So we talked about this a little bit, but I snagged this screenshot. And here's the stuff that I want to call out. Okay. GDP growth rate quarter over quarter. We were expecting 1.6. Previously was 3.4. We came in at 1.3. That isn't good any way you look at it. This one, corporate profits. Corporate profits was a massive miss. They were previously 3.9, expected 3.9 again, came in at negative 1.7. Then when you go down here and you start to look at a breakdown of retail inventories and things like that, inventories are higher, which that is not a great thing, okay? We want inventories, obviously, prices, when inventories are high, that means you have a lot of supply, less demand, so we would see, again, prices beginning to start to curtail down and fall. And we don't want them to fall too precipitously because that creates a stagflation is what that it would be known as. Then if we come down here to the last one I really want to point, well, actually 2 more I want to point out, GDP sales. So we are a consumption-based economy in the U.S. We were forecasted to be at 3.9%. We were forecasted, to be at 3.9% and previously at 3.9. We came in at 1.7%. So that's a big miss there. And then the last one is this. Home sales. So pending home sales month over month was down negative 7.7% and then negative 7.4%. Now, more people move in the summer months, so these next few months will be very interesting to keep an eye out on that because home sales is what you would call a pass-through economy, meaning, okay, I buy a home, but I'm also going to buy appliances, I'm going to buy furniture, I'm going to buy curtains, I may have a child, I may buy a second car, I may buy all of these things where that, again, stimulates the economy is home ownership. So, and obviously that's because of interest rates, being very restrictive as well as high prices, Another thing that I want to touch on here. So this article, this came out, I think, today, this morning, from breaking down what's driving the S&P higher. Well, 31% of the growth from the S&P 500 has been from 5 stocks. Well, Microsoft, 5 stocks. Microsoft, Apple, NVIDIA, Alphabet, and Amazon. Those are the 5 stocks that are responsible for 31% of the weighting growth in the S&P 500. And, we're having a interesting thing happen. Tesla just recently announced their AI chips. It was the first place I read about it was actually Elon Musk's biography. And then in their 10K, it was quietly just inserted in there. And what's interesting is that if you look, all of the AI chips that they ordered from NVIDIA, they are rerouting those over to Twitter because Tesla is about to use theirs, proof the concept, and then it takes no time to switch. So for me, the biggest hooks for the next few years, which there's the I guess the CEO of Iconic, he's a very large hedge fund operator. He announced as well, like the biggest area of opportunity for growth over the next probably 3 to 5 years is going to be the people that are driving this AI growth, right? And people say, oh, AI is a buzzword. Well, it was a buzzword that got rid of 50,000 people at Google, 30,000 people at Microsoft, 30,000 people at Apple, and about 30,000 people at Facebook. So it's a little bit more than a buzz. It's a buzzkill, if anything. And it's also what every platform is trying to get. I look at it a lot like web, right? We had web 1.0, 2.0, and now we're in the era of web 3.0 with connected devices and cryptocurrency and things like that. This is that next iteration of computing. This takes it to another level, and the person who makes it cheaper, better, and faster will always win out. The last thing I wanted to touch on, I know it's near and dear to Brandon, to your heart, which is NBA rights. You had Amazon, ESPN, and NBC. They are very close to inking a deal for the NBA. And then TNT are in talks for some games as well. So we're seeing a shift, right? Live sports shifting to Amazon and ESPN Plus and NBC. We saw it with golf. We saw NFL games on Twitter. And Amazon, we're seeing it with many different sports are moving from the traditional, and this was the last holdout for cable, right? This is that last thing that prevents people from switching and cutting the cord. So that will be a very interesting thing. And then the only other thing is, about Apple in China. They're in talks about launching an Apple Plus TV in China. And obviously there will be all sorts of things going on with that, but China is a huge market. And then more in more, and that was pretty much it. That was pretty much all I wanted to discuss here today.
I love it. I mean, a lot of good stuff to discuss. And, a lot of times I think that people don't realize that the things that we're talking about here is it's coming, and some of it's already here, just like you said with the AI. And to really understand how AI is going to be able to support us is why we want to be active and hold custody of our money and everything else. Because it's like, if you know how to use these tools and other people haven't, we're ahead of the curve. And so Core 4 is talking about things that other people just aren't. So great job.
Thanks, sir.
All right, so now we're moving from the Core forecast, which hopefully you guys all understand, to the Core 4 report. So right now there are two things. If you remember on the last show, we talked about how we made a determination that we're going to take the gambling away from Core 4. And what does that really mean? That means that binary options, as wonderful as they are, as profitable as it can be, because it is gambling with a strategy, it really does not move the needle enough. And so we want to make sure that we're helping ourselves to be great by moving the needle in a way that we can control and in a way that's more on the investment side. And so what do we have? We have a new robot that is out. It's a Core 4X robot. And so that's available, that you guys can then attach to your MT4 and then let it run automatically 24 hours a day. You will have a little bit of stuff to do, but we have a great team in Coach India. Let's see, is Coach India here with us today? Let me see. I'm not sure. But if she shows up, I'll bring her up. But we have Coach India, who will give you white glove service along with Coach Sonia. And so we have that. And so the robot is working. It's taking, it's looking for its, how do I best say this? When it's high, when it's low, it's looking to make those entries. And it's doing so not looking for a trend. It's looking to stay in a range. And so by doing that, it can go up, it can go down. It's just going to collect profits. It's a money-making machine. We also have the Coinbase Trader, and the money stays in Coinbase. You hook the API up to Coinbase, and so then it allows you to be able to easily just make money. I've been doing it now for about almost a month, and we are extremely satisfied with it. And again, because the money stays in our wallets the whole time, and it makes a huge difference. And then finally, we have yield farming, and yield farming has been fantastic. And Eric is not here with us today, but what we're going to be offering is technical analysis for some of the pairs so that we could give ourselves some predictability. And that's going to be coming out in the next few weeks. So the last thing that I wanted to talk to you guys about, and today is about change your circumstances. And so I just want us to know that changing your circumstances is not an overnight deal. It is going to take time. You're going to have to learn. You're going to have to build. I like one of our students, and it's like she's saying, I'm learning all the time. She's in the chat. She's actually helping herself to grow, and she's not making it where it has to be immediate gratification. And we all win that way because we are a community. So we want to change our current circumstances, then we have to know that it's not going to be something that's instant. It's going to be something that is going to take time, let it develop so that there's some long-term predictability in your success. But one of the things that I want to talk to you guys about really quickly is we are going to be bringing on a couple of more concepts. And one of those concepts is where we just want you to look at a particular business model. And then from looking at that business model, and we've been watching this now for a couple of years, take a look and see whether or not, and it's in the crypto space, if it fits and how it fits. And we're not even saying invest in it. We're saying watch, because that way you can learn more and more and more and more. So just wanted to give you guys a teaser for, what's coming up. And so we'll have guests on to be able to talk about it. And then let's see what happens. Because if it strikes gold, great. If it doesn't strike gold, we never told you to invest in it in the first place. That's not what our goal is. Our goal is to evaluate some companies that are in the space that actually look like it has some potential and it's not a platform. So with that said, I just want to say to you guys, I think it's next week is Father's Day. I am a father of 4. We're going to take off next week, so I can spend time with the family and all of our other wonderful teammates, and you guys can spend time with your families. That's what this is all about, is making sure that we're leaving the right legacy at the right time. So with that said, I just want to tell you guys, I love you whether you like it or not. Have a great week, and I'll talk to you soon. Thank you. Good night.